The AI trade just violently reversed. Chips ripped higher into the best quarter in years, even as Google quietly cut off Meta's compute. 4 more stories moving the tape. Let's get into it. Start with the tape. After last week's roughly $1.3 trillion semiconductor meltdown, the AI trade violently reversed Tuesday. The Nasdaq climbed 1.5%. The Dow closed at a record 52,319, and chips led the charge. NVIDIA up 2.6%. AMD up nearly 8%. Intel up 6%. It caps a blockbuster quarter. The Nasdaq soared roughly 20%. The S&P more than 14%. Why it matters. The efficiency reckoning bear case, the fear that cheaper inference guts megacap revenue, did not break these stocks. It just repriced them and now resets the board for July earnings. But the bear case is still live. This was a valuation bounce on guidance, not resolved fundamentals. Stretched is still stretched. The forward signal. Watch the July earnings run. If data center guidance comes in hot, this rally has legs. If it disappoints, the reckoning thesis roars right back. Now, the underbelly of that rally. Taiwanese prosecutors expanded a criminal probe Monday, raiding Supermicro and 2 supply chain partners across 9 sites and summoning 6 people. The allegation, roughly 40 high-end NVIDIA servers routed to China, Hong Kong, and Macau on forged customs paperwork. Shares fell 8%. This ties into a broader $2.5 billion smuggling ring and follows March DOJ charges against 3 people, including Supermicro co-founder Wally Liao. The read-through, export control enforcement is no longer abstract policy. It's a direct equity risk sitting on the AI hardware supply chain. The bear case is obvious. Legal overhang, customer trust, and a company already burned by a past accounting scandal. The forward signal. Watch whether prosecutors name buyers or push beyond Supermicro. If this stays contained to one integrator, it's a headline. If it spreads to the channel, the entire gray market compute trade reprices. Here's the tell of the whole cycle. The Financial Times reports Google was forced to cap Meta's use of its Gemini models after Meta blew past its allotted compute. Let that sink in. The company running one of the world's largest TPU fleets can't supply all the AI compute a single customer wants. Meta has now told staff to use tokens more efficiently, the exact token maxing pivot that spooked the AI leaders last week, and it connects straight to today's rally. Compute, not model quality, is the binding constraint on AI revenue. That's bullish for the picks and shovels layer. NVIDIA, memory, power. The bear case. It's outright bearish for anyone whose growth model assumes unlimited cheap inference. Meta runs no cloud of its own and has pledged $600 billion in data center spend to fix exactly this. The forward signal. If hyperscaler capex keeps climbing, the constraint is real, and the memory names win. Today's concrete milestone. Reflection. AI starts paying SpaceX $150 million a month, effective July 1st, for NVIDIA GB300 capacity at MUSK'S COLOSSUS 2 data center, up to $60 billion through 2029. Reflection is the open-source lab founded by ex-DeepMind researchers Misha Laskin and Ioannis Antonoglou, an AlphaGo co-creator, targeting government and national security customers. Why it matters. Colossus now carries more than $80 billion in committed outside compute revenue. Anthropic, Google, Cursor, and now Reflection, making Musk's cluster one of the largest third-party AI compute platforms on Earth. And NVIDIA sits on both sides of the trade, selling the chips and powering the demand. The bear case. Either side can walk on 90 days' notice after month 3, so that $6.3 billion headline is really a monthly option, not a locked contract. The forward signal. Watch whether more labs rent Colossus capacity. If they do, SpaceX is quietly becoming a compute utility. And this is exactly the picks and shovels layer the Google Meta squeeze pointed to. The June 30th bounce was broad and led by the supply chain. Lam Research jumped 8.4% to nearly $411, with Cantor setting a $500 target, while Applied Materials rallied on AI memory demand, lifting the Van Eck semiconductor ETF about 4%. The anchor is Micron, a record fiscal third quarter, $41.5 billion in revenue, $25 in EPS. That pushed it past a $1 trillion market cap on HBM strength. Gartner still sees full year 2026 chip revenue above $1.3 trillion. The bear case: memory has always been brutally cyclical. Today's shortage becomes tomorrow's glut the moment capacity catches demand. The forward signal: watch HBM pricing and hyperscaler CapEx guidance into July earnings. As long as compute stays the binding constraint, memory holds its bid. The day that cracks, this is the first trade to unwind. The through line today: the AI rally roared back, but every story underneath it points to one thing: compute is the binding constraint, and everyone from Meta to Reflection is fighting for it. Follow the chips, follow the memory. If this breakdown sharpened your edge, subscribe. This has been the Daily Alpha.